Hey everyone, and welcome to Earnings Cheat Sheet for Friday, October 11th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. All right, Ed, so we're kind of starting to get into the thick of things. How's it going over there?
It's going okay. It's going to get a lot busier next week. I'd like to take a look at three stocks, but I'm going to look at more, I'm sure. But Taiwan Semiconductor, Netflix, and UnitedHealth.
All right, well, let's start with Taiwan Semiconductor. The chip maker is scheduled to report Q3 earnings on Thursday, October 17th, and earnings are expected to rise 41% to 178 per share. And revenue, which was reported on October 9th, rose 39.6% to $23.6 billion. That beat expectations. And if both those figures come in as expected, that would mark another quarter of accelerating growth. And here's why we're watching Taiwan Semiconductor. We'll be paying attention to specific comments about AI chips, any Blackwell hints in there, as well as chip equipment guidance. So, talk to me about Taiwan Semi because I think maybe the better than anticipated performance here kind of gives the picture that maybe AI spending isn't as bad as investors might think it is.
Yeah, I mean, look, this Taiwan Semiconductor, so everybody is aware, it's the world's largest contract chip maker. They make chips for other folks, and they make the cutting edge chips, NVIDIA, Apple, Broadcom, and a lot of others. So what they do really reflects on a lot of those companies. The growth has been driven by these high priced, high demand AI chips from NVIDIA and others. And so and their spending on capital equipment is huge for the chip equipment. So this is an enormous report, really a guidepost, especially with NVIDIA going to be a few weeks away. This will give you an idea about how things are there. So far, things have been good. It'd be great, but we're going to want to hear that guidance. We know that these numbers are going to be pretty good. We have the sales, have a pretty good idea. The earnings are going to be pretty good too, just sort of knowing that. Then the question is, what's the guidance going to be like? Are they going to say, hey, we're still seeing momentum? Or are they going to say, well, we're seeing weakness in smartphones? That might be something. It could be that AI chips are fine, but maybe smartphones not so much. So really important to do that beyond that. And of course, Taiwan Semiconductor, one of the biggest and most important companies all by itself. So, I mean, it's not just for other folks. People are going to care about it just for Taiwan Semi.
Yes, this will definitely be a good barometer to see how things are shaking out. But let's jump over to the chart, Ed, because this one broke out of a 175.45 cup with handle, and it's just above a buy zone. But how would you look at this chart as earnings approach next week?
It looks pretty good here. It broke out, then had sort of an ugly sell-off, and the recovery has been steady since that point. Was on light volume, which wasn't ideal, but still nice action here. Relative strength line is pretty close to highs. That's after a long run. I think, you could probably use the 189.33 as sort of an alternate pivot. That would be something I wouldn't be doing anything with it before earnings at this point. If it pulled back into the buy zone, that would be another thing. Again, after earnings, you just don't know how things are going to go. But yeah, this has been doing pretty well, and definitely one people should be looking at. If it breaks out to new highs, it'll be over $1 trillion, back in that $1 trillion club.
Right. And as you mentioned, we see these accelerating earnings growth here. So it'll be interesting to see if Taiwan Semi can notch another quarter of that. And we can see the full year estimate up about 24%. So pretty solid fundamentals there.
Yeah, absolutely. It's like that strong growth, accelerating growth. And the stock and chip stocks do this. They'll pick up before the earnings have turned around because people can see that's coming. And so you just have to be aware of it. So it is possible that this stock, I'm sure, will peak when the fundamentals look great. That's a classic thing with any stock, but especially chip stocks. But right now, it seems like there's a lot of momentum.
All right, well, let's move on and take a look at Netflix. The streamer is scheduled to report Q3 earnings on Thursday, October 17th, and earnings are expected to climb 37% to 510 per share, while revenue is expected to rise 14% to $9.765 billion. Now, both of those numbers would mark slowdowns as snapping a four-quarter string of accelerating revenue growth, but subscription gauge should pick up in Q4. And here's why we're watching Netflix. The company will no longer give subscriber guidance. So investors are going to be a bit in the dark here. So any advertising hints would be nice to see. So, Ed, we saw some positive news here this week on October 8th. JP Morgan kind of giving the stock an upgrade. Shares bounced on that news. And those analysts say positive catalysts include that subscriber growth and revenue growth from advertising. So, what are your thoughts on Netflix?
Yeah, I mean, the revenue at that ad tier has been really positive for subscriptions and also just the advertising revenue on top of it. On the flip side, the costs have been under control because they just haven't had to spend as much on content. I know as a Netflix subscriber, there's a lot more licensed content from places like, like Max, AMC, and others are now probably shifting that over. So that provides relatively cheap content. So that's a nice mix. Strong revenue growth, and they've had accelerating revenue growth, but costs probably slowing down at least as a share of revenue. Really nice action there. Again, they just seem to be the premier streaming service. A year or two ago, it was like, well, I don't know. They seem to be under pressure. There's a lot of services. Can they do it? But they've come out of that, and it's just been tremendous. You can, the earnings growth is supposed to be really strong this year, and then next year is also supposed to be a solid year, just steady performance, and just really, really firing on all cylinders.
Yes, Netflix definitely seems to have emerged as the leader in those streaming wars. And Ed, give me your thoughts on this chart because this one, another recent breakout and just kind of hovering in this buy zone here from this cut base with a 697.49 buy point. So again, as earnings kind of approach, how are you looking at this stock and should investors be analyzing this stock?
Well, I mean, it's in the buy, it's just maybe just in the buy zone or at the very edge of it. You could probably have used some alternate headlines as it cleared little areas within that buy point. Here's the thing, I mean, and this goes for Taiwan Semi as well, but especially something like Netflix. This really moves on earnings, and it has some big gapped ups and down. Even the last one, okay, yes, it didn't close that much, but it gapped up, then reversed lower. So the intraday swing was enormous. But you'll often see 10% gains, 10% losses. So if you don't have much of a cushion, if you bought around the buy point, say around 700, you don't really have much cushion. Now, so you have to make a decision. Often with IBD, we say, well, maybe you should have a cushion of 10% heading into earnings. So you could choose, I'm going to sell. You could do an earnings options play. You could say, I'm going to sell half. And then keep the rest and let it ride, see how it goes. But you should have some strategy going in. If you have a longer term hold, if you bought it, well back before then there's no reason to, then everything's fine. I got a huge gain and no reason to sell, but definitely something to watch out for with earnings season in general, but especially with a name with Tesla. I mean, not Netflix always seems to have this kind of move up and down.
Right. And as you can see, we're on the weekly chart here. It's had this really nice move over the last years and then also been trading tight here as we approach earnings.
Yeah, and so there is that question, how much more can it go? It's had a really big run. It's more than tripled over that span from the bottoms in 2022. Again, people were really down on things back in 2022. Revenue earnings were falling, and it just seemed like subscriber growth was struggling. It just felt like has Netflix sort of peaked, like have they gotten every subscriber they can get? And the answer is no. But it's a real turnaround. So it probably won't go on a run like that, but it doesn't mean it can't keep going on a solid run if those numbers keep coming in.
All right, Ed, well, let's go to the next stock on our list. That's United Healthcare, which reports earnings on Tuesday, October 15th. And the insurer is expected to see Q3 earnings rise 7% to 702 per share. And analysts expect revenue to climb 7% to $99.145 billion. And here's why we're watching United Healthcare. We'll want to focus on the medical cost ratio figures, especially with Medicare Advantage utilization picking up. But Ed, talk to me about that because with their big Optum services unit, is that higher use rate such a bad thing?
Yeah, it's a mixed bag. It's because generally look, I mean, insurers love the idea of collecting premiums and then not paying much. They love it when people don't go to the doctor, when they don't use their medical services. So that's been an issue. There's been increased use of medical services. So that medical cost ratio picking up, they like to see it low. So that's been picking up, but they have a huge services in a unit Optum. So as people are using more services on the medical side, they're probably also using Optum. So there is some offset, whereas others, it's just bad news if the patients are using that, and that's been a problem for some other rivals. But UnitedHealth has been able to weather that. It's interesting because Humana, which is another big Medicare Advantage player, boy, that one has just had problem after problem. UnitedHealth though, steady grower. The growth has slowed a little bit on the revenue side, but still there. Solid earnings growth. It's just a consistent winner on the profit and revenue side. So, I mean, yeah, it's just it's not going to be this massive winner like some stocks because it's not that kind of name, but it's something that people can be considering for their portfolio because it's just sort of a steady performer in there.
Right, slow and steady, and as you mentioned, competitors like Humana and CVS Health, have pretty much had to scale back some of those benefit offerings for next year. But let's take a look at the chart then, Ed, because this one is forming a base, an official 607.94 buy point. Retook this 50-day line here earlier this week. So, what are your thoughts here with the technical action?
Yeah, this is doing pretty well. There's a lot of other services firms, not just a lot of its rivals. Some hospitals have been struggling, but this has held up very well. If we go out to a weekly chart, this used to be. It has at times like it's had a rough period because I think that there was concerns about how some rivals were doing. But this is like, well, wait a second, United Health is actually doing okay. So there was a sell-off because of that, and people were concerned. But as it turned out, it seemed like the numbers were still coming in pretty well. So it's bounced back. It finally cleared a long consolidation going back for a couple of years. So that was sort of positive to get through that. That was an opportunity. Now it's sort of setting up again. So, because people might have said, well, that was a deep base and it's hard to jump into it. And by the time it finally cleared that consolidation, it was extended. But sometimes the way to go is to look for when you have these big consolidations or deep bases, that can be messy, wait for something tighter. And now it's formed a nice, tight, flat base. There's been some tight action in there. It's on the 10-week line. So it's definitely tightened up. It's a little bit of a safer opportunity. Again, waiting till after earnings. We'll see. But it's setting up nicely here.
All right, Ed. Well, so those were some of the notable ones on our radar. So let's take a look at a few more, shall we? Starting with Goldman Sachs, which reports next week. And we have the big bank earnings coming up. But again, we're on the weekly here. I'll switch back to the daily so we can see a little bit better. This one also in consolidation, another one that climbed back above that 50-day line this week. So, what are your thoughts with Goldman Sachs?
Yeah, this is one you definitely want to be very cautious ahead of earnings because not only do this have earnings, but a whole bunch of other banks are going to be reporting before Goldman Sachs. So this one could swing up and down a few times based on that. Otherwise, you could have argued that the recent action when it moved up off the 50-day line was sort of offered an early entry from a trend line or what have you. It was just showing some nice positive action. The earnings growth is slowing. Comparisons are getting a little tougher, but it's been pretty solid. Actually, revenue growth has been slowing, but the earnings have been really strong. So it's been a really strong performer here. This has held up better than some of the other big banks, which have moved sideways or actually lagged. So definitely one of the leaders in that regard. So it definitely could be actionable. Assuming that things still look something like this when earnings come out, but definitely want to watch.
And we've seen that those financial names performing well this year. Let's take a look at another one. That's American Express. This one looking a little bit extended. But what are your thoughts here as earnings approach next week?
Yeah, this one's extended. There's not much you can do about it, but it will be interesting to see the credit trends that they have and just see how this holds up. Because it's a clue about consumer spending, and we'll get it from some of the big banks. Because when we talk about Visa and Mastercard, they don't actually issue the cards. It's from J.P. Morgan and some others, so they'll have things too from a different angles. Get an idea about the health of consumer spending, consumer lending. This has been a strong stock. I mean, it just has been. It's been hard to buy at times, with some of the things, some up and downs, but it's trended higher here. And it needs to set up again, it looks like.
All right. Well, we talked about Taiwan Semi, but let's talk about ASML because they make equipment for these chip makers. They also report next week. And, this chart looking not as great as Taiwan Semi, but talk to me about what you'd like to see from ASML here and what earnings hopefully can tell investors.
Yeah, I think we need to see the guidance to turn around. There's supposedly going to be a turnaround in 2025. This has not been a particularly strong year. I mean, there's some China restrictions, there might be some other issues, but it just hasn't happened. So this earnings report, its guidance, and honestly, the Taiwan Semiconductor capital spending guidance, it's going to be really important. And this is the first of the big chip equipment names. It's one of the very biggest. So that'll set the tone for, along with Taiwan Semi, set the tone for the chip equipment makers.
Right. Well, let's take a look at some mining names, starting with Rio Tinto. And this one in a double bottom base, 74.24 buy point. But this one's kind of been all over the place here, Ed, recently. So talk to us about this chart.
Yeah, I mean, Rio's a little different from some of the other miners. It rallied up nicely, partly because of some China stimulus and because China uses so much iron ore, copper, and stuff. So if China is moving, that's a positive for these miners. It pulled back a little bit with some weakness, but what also hit not only with China news, but it's also because Rio make it an acquisition takeover deal. So that knocked it because that's maybe dilutive to Rio for a while. So this one needs to bounce back. It's sort of a messy pattern at this point. Want to see it bounce back, but it may take some time before it really sets up again because of that recent action.
And let's take a look at BHP as well, because that's another mining name. This one also kind of in a funky cup with handle base, but has really seesawed action here over the last couple weeks.
Yeah, these are tough because by the time it moves up, then you start feeling is it time for a pause? I feel, that's an issue with some of these names because so be nice to see this momentum pick up, but honestly, they need to see sustained growth from China. In the US is picking up, which is nice or at least solid, but they just still look a little wild and messy for to really get too excited about them.
All right. And last week we took a look at Delta Airlines, but let's take a look at United because they also report next week. And this one, again, looks like it broke out here, it had that nice 20% gain, and it's in a profit taking zone. So, Ed, if you bought into United, what should you be thinking about as they prepare earnings?
It held up very well with Delta. United announced some international expansion, so they're in growth mode. Of course, that means some higher costs, but yeah, this has probably been the leader among the big airlines, and so people want to see a turnaround. The Delta earnings weren't that great, but people shook that off a little bit, I think. So, want to see how that goes. It's just extended right now. There was a chance to buy it when it broke out there. I'm not sure where you would buy it because it's actually in the profit-taking zone. This might be an area where stocks often pause, pull back. So I just need to wait to see if it can form a tight pattern or wait for a pullback or a new base. But one of the leaders in that group.
All right, let's wrap up with Intuitive Surgical. They make those Da Vinci operating robots. If you remember, they did surgery on a grape. And again, another one here that broke out back here in May of this year and has been on a pretty nice run. It's pulled back to the 50-day line this week, but rebounded. So, what are your thoughts here with Intuitive?
Yeah, I sort of teased an entry a day or so ago, but now at this point, I think you want to wait. It's basically formed a flat base. I mean, it hasn't because it peaked above that, like the 493, 496. Yeah, it's that area I think you can treat. If you look on a weekly, there's probably going to be some tight action there. It certainly feels tight. Yeah, there's definitely some tight action in there. So it's not quite long, technically not there for a flat base, but I think people can treat it there. If it goes above recent highs, I think that people could be using that again on earnings. But this has been a real strong performer for a long time. It definitely has the new. People are going to want to look to see not just about earnings and sales, but also the number of procedures, because that's like how much and all the repeat things and the accessories or some of the add-on things that you need. That's a big key for that, but really a strong performer.
And we can see some of these fundamentals here, Ed, just really consistent, solid earnings growth and sales growth. So we'll see if Intuitive can continue that. And that's all we have for today for this episode of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune into Stock Market Today with Alyssa Coram. That goes live after the closing bell. And thanks so much for watching, and we'll see you right back here next week.